Good morning everyone and welcome to the Money Control live stream. Boy oh boy, are we living in interesting times, aren't we? One move by the Bank of England, Santo, has clearly changed the narrative around financial markets. By the close of yesterday's trade, we were in a world where inflation was the monster and the Fed was trying to raise rates as aggressively as possible. And not only the Fed, even the Bank of England and the European Central Bank. But by 3:30 p.m. yesterday, everything seems to have changed. The Bank of England announced a surprising quantitative easing or bond buying program to stem the rot or the collapse in the UK bond prices that we have been seeing for the past couple of days. If you look at investors, the way they read it is that if the BOE has already done it, can the Fed be far behind? And because generally these three central banks, the BOE, ECB and Fed, tend to move in tandem with each other. If you look at the way financial markets took this news, well, the risk assets took it really well. Stocks, oil, Bitcoin, all three risky assets rallied into the day, late into the night. If you look at the S&P 500, almost higher by 2%, oil rallied nearly over 3%, and Bitcoin also rallied nearly 4%, Santo.
Well, I think the Bank of England was not left with any choice really. It's not something that it would have done given the normal circumstances. But here what seems to have happened is that pension funds were hit with huge margin calls as high as about £100 million. Wow. Now, you don't usually associate margin calls with fixed income products and pension funds, right? You largely associate them with stocks. But what happens is that when there is a sharp rise in yields, the value of the bonds in the portfolio fall very sharply, and the funds which are holding them then need to top it up. Either they need to reduce their position or they need to put up more money. So if
is it similar to what happens with pledge shares, right?
Exactly. Yeah. So that's the thing. So in this case, when the value of when the yields rose very sharply, by extension, the bond prices also dropped, which led to a sharp erosion. Now, one way was to bring additional money, but the other way probably was to somehow cool bond yields, and that is probably the option that Bank of England would have taken. So it's hard to say, CJ, if this is a lasting move. It's more like a knee-jerk reaction to temporarily summit, but it's clearly not.
Well,
a
in the BOE
solution.
statement, Santo, they've clearly said that while the scale of the QE or the bond buying program is limitless at this point of time, they have categorically stated the word temporary. So we will have to wait and see whether how long is temporary, because we have been here in the past when central banks have intervened in the market on temporary basis, but have found it really, really hard to get out of those.
And the other point that you raised about whether Fed will also do the same thing, that seems unlikely, because all through the last 3 months, Fed has been saying that inflation is the bigger problem and will stop at nothing till we bring it down. And yet the markets has chosen to look at the other way around. And in fact, they have been doing something that has been cautioned against, which is to fight the Fed. And now they seem to be paying the price for that. So it's very unlikely that the Fed is still done with its interest rate hikes, and if you read the reports coming in from the US, most bond market people feel that you still got some more pain ahead. So I think yes, there is expectation from the market given the way markets has reacted yesterday after the Bank of England response to the rising bond yields, but this again is very temporary. I don't think so, CJ. We are still done with the pain at this point. You might see some intermittent bounces, and that said, a different point here is that should then India's sovereign have a higher rating, given the mess that you are seeing and these are highly rated sovereign bonds.
You don't often see the IMF ticking off a developed market like the UK.
The question is, if an emerging market like India had done something like this, something as bizarre as trying to tighten and ease at the same time, what would have happened to a bond rating?
Yeah, we would have been probably laughing stock in Western universities probably by now, or in economics 101 classes. But that's it, Santo. I think the key point that I want to make here is that the reason why probably the market is feeling that the Fed could be next is the fact that BOE's intervention was largely because it saw a risk of a collapse in its financial system, right? That is the financial accident that Mohammed Al-Arian, the chief economist of Allianz, also mentioned, that because of dollar strength and because of the liquidity crisis that we are going through across the global economy, accidents such as the pension fund, the margin calls on pension fund in the US, you have hedge funds who have often been at the other receiving end of such sort of an issue. If financial stability becomes an issue, then does the Fed have no other choice but to abandon a fight for inflation temporarily and maybe, try to assuage the market? So we will have to wait and see. So far, one indicator you have to keep an eye out on is the spread between the 3-month LIBOR rate or the London interbank overnight rate and the US index swaps. They have spiked to the levels we last saw when the Russia-Ukraine war was happening. So clearly, the market is sensing some financial distress, and we will have to wait and see whether the Fed responds to that, Santo, or not. But the next, cue to watch would be actually the European Central Bank, Santo. And why I say this is because if you look at one indicator of stress in the European economy, it is the difference in yield of the Italian bond, which is one of the weakest economy, and the German bond, which is the strongest economy. That yield has now surged past 200 basis points. In the past, at least in the past 15 years, whenever that has happened, ECB has come and intervened in the market and bought bonds to assuage market that the European economy is going to hold well. Right now, that seems to not be the case so far. ECB has indicated that they will continue with rate hikes. But look at the market. They are now fighting the ECB as well, because Santo, yesterday, the odds on an ECB 75 basis point rate hike, which seemed dead on at 90% till yesterday, day before yesterday, they have now trimmed down to 40% only just after BOE's move. So it goes to show the market is moving in a different direction, and maybe policymakers have to catch up. Well, that's it, Santo. Let's quickly move on to the trade setup for today, and it's going to be quite a good day at this point of time. It seems like the H6 Nifty is indicating almost a 200-point up move for the benchmark indices today. Wall Street, of course, is giving us the positive cue that we all been waiting for the past couple of days, in the market. But the key thing, I think, would be, Santo, the short covering that is likely from FIIs. They are at this point of time net short on index futures by almost 100,000 contracts. So clearly, there is a lot of short covering that can happen from their end. And plus, today is the expiry of the September derivative series. Generally, you see a lot of squaring of positions happening. So I will not be surprised if this 200 move becomes a 250 or a 300-point move.
Well, probably you could see some short covering today being expiry day, but that's not really going to change the near-term picture, CJ, is how I would put it, because given the distress in global financial markets, it's very likely that foreign funds could remain sellers at least for the short term, at least in the short term.
Okay.
So that being the case, you don't have enough money coming in from domestic mutual funds at this point in time. The mood has changed cautious, and what is happening also is that while the SIP money is coming in regularly, investors are taking a bit of tactical or strategic bets whenever there is volatility in the market. So you're not seeing the same kind of euphoria as was the case till some months back, or at least till last year when you had people rushing in with lump sum. That is certainly not the case. So near term, I would say that it still calls for a bit of caution, and unless you see FIs resuming purchase, you could likely see.
I think, Santo, we will have to wait and watch how the market reacts today, and probably if we end with the entirety of the gains in our hand, it will be interesting. Or do we see profit booking towards the end of the day? That said, let's quickly now move on to some of the stocks that will be on our radar today. The first name is from the aviation space.
Yes, Interglobe Aviation. Now, in an uncertain market, CJ, probably the best strategy would be to look for stocks that have not really risen much, which means that here on things can only get better for them. You've had Interglobe Aviation, which is repeatedly reacting to rising crude prices. Crude prices now, given that the chatter of recession is growing louder, I think barring the occasional spikes and dips, it most likely crude oil prices are likely to remain stable, and that's a big positive for aviation companies in general, for the airline sector. But specifically in case of Interglobe and Indian airline companies, I would say that vacation travel is back with a bang, despite very high fares.
Yeah,
right?
very, very high actually.
High fares, people are still traveling, and that plus you have got stable crude oil prices, and I think these are good times for aviation companies, at least in the near term. You got the busy holiday season coming up from October, and clearly that spells good news for airline companies. So this probably could put Interglobe and other airline companies in the spotlight.
Well, Santo, maybe in the short term, but I think in the long term we have to be concerned about the competition level in that sector, because clearly, yesterday reports came in that Jet Airways will start now announcing its fleet for the comeback, the impending comeback that it's trying to make. So clearly, I think this competitive level in the sector will be under the scanner, and more so the margins, because whenever competition rises in an industry, you tend to see margins take the fall first. And not only Jet Airways, look at what Air India is doing. Air India is, working on a plan to increase its market share to as much as 30%, Santo, over the next few years. So clearly, the Tata Group is now becoming ambitious as far as its aviation business is concerned. I think that overall spells a little bit of bad news as far as the sector leader, which is Indigo, is concerned for me. And, Santo, yes, maybe vacation travel has so far held on, but let's not forget that higher ticket prices, the spike in ticket prices has not stopped yet. We are yet to see a lot of the cost, that the companies had absorbed earlier to be passed on to consumers. So I would believe that ticket prices will continue to remain high going ahead, and eventually I think it will start impinging on demand, as probably it is doing already in certain segments of air travel. Well, the first stock on my radar today is from the new age tech space, and this is Zomato. Now, why I have I will be watching out for this stock is largely because of what has happened in the government bond yields across the world. Now, let's jog our mind back to 2020 when QE came, when bond prices were rallying and bond yields were falling. Technology stocks were the front or the first names that were on everybody's mind, because they are high growth stock. Generally, they tend to do well because they see re-rating on their valuation in periods of low interest rates or low bond yields. So for me, I think, Santo, if bond yields continue to slide going ahead, possibly because of expectations of a QE, then Zomato could be in for a re-rating that it has, after the de-rating that it has seen over the past couple of months. Apart from that, if you look at, if you're looking for Q, look at DoorDash in the US, one of the peers of Zomato globally. That stock rallied 3% yesterday, clearly indicating that investors are again probably looking back at high tech or high growth tech stocks once more. Apart from that, fundamentally, Santo, Q1, we know, we have spoken about this in the show earlier, that the Q1 earnings did provide a lot of confidence back into Zomato. The fact that the food business almost turned profitable on an EBITDA level has really boosted investor confidence, and therefore this is one stock to watch out for.
Well, I'm not very sure about the argument you're making there, CJ, about connecting yields, interest rates with tech stocks. Now, that works well at a point when the company is still not gone public and wants to raise money. That allows it to raise money at very cheap rate. Now, Zomato has already gone public, so the changes in interest rate does not really bother it. What investors seem to be looking at this point is whether the company will deliver on the timelines that it has set for itself. So, over the last few months, you're seeing a lot of lots of volatility in the stocks. You had that big investor sell-off who were holding the shares.
Yeah, when then you had Blinkit.
Yes, you had the Blinkit acquisition, and all these factors are keeping the stock in the limelight. It's allowing traders to have a lot of trading opportunities there. There are some 10-15 rupee moves which has been captured well, but till investors see some certainty on the company delivering on the timeline for going, EBITDA break even and a consistent growth in its average monthly users, I think this is a stock which will be at best a tactical bet.
I think, Santo, we will have to, of course, wait and see how the market reacts to it. But just one limited point here is that Zomato so far has been able to surprise investors positively as far as this business performance is concerned. So I think at least on that front, the company so far has been delivering, and we'll have to see whether it can continue to win the market's trust by delivering on earnings in the second quarter.
Still at 60 rupees only, less than 60 rupees. Lupin is the third stock. Again, this is a stock which has not really gone anywhere for some time, and for good reasons. The company is in the midst of a major restructuring process, and that probably will start yielding results. Q1 numbers were a disappointment, but if you notice, CJ, the stock has not adversely reacted to it. It remains steady. That's an indication that probably the market has already factored in the worst, and the company has also guided about 18% EBITDA margins for the whole of FY23. Now, basically how it's going to achieve it is through a combination of cost cutting measures. It has shut down many of the unprofitable brands,
it has.
And at the same time it's also got a lot of high value products lined up this year and the next in the US. Recently it has also got 3 product approvals in the US, UK, Canada. So this is a stock probably one could see surprising the market in the days ahead.
Well, Santo, before I move on to my argument against Lupin, just quickly take a check at the market, and clearly we've had a very strong opening. Nifty higher by about 160 points at this point of time, and Sensex up over 500 points. Santo.
Well, mid-cap 100 is up by a little over 1%. Strong market breadth there. 1,800 stocks up and just 100 stocks down at this point in time.
That's
but
very
the
strong.
last few days again, CJ, market opened on a fairly good note and then started losing ground towards the end of the day. So we'll have to see how much of the gains.
I think, Santo, we will have to see whether the mood has turned. One indicator of the mood turning would be the fact that if we can build on these gains. If we do not, you would see a lot of the cautious traders and investors out there utilizing this bounce to book profit or cut their losses, because they would probably want to sit on cash at this point of time, fearing that the market may have more to give going ahead. But if you look at sectorally, clearly at this point of time, Nifty IT, Nifty Bank, Nifty Auto and Nifty Pharma among the top gainers, and Nifty PSU Bank surprisingly very, very strong, higher by about 1.4% at this point of time. So clearly it's been a very, very strong start as far as the market is concerned. Well, coming back to Lupin, Santo, with Lupin, you always have to take that guidance with a pinch of salt, because if you look at the management's guidance over the past 3 to 4 years, they have consistently probably failed to deliver on those guidance. And cost cutting probably is not something that is new to Lupin. They have been doing it for the past couple of years to improve their margins. But I think the major core issue still remains that the US business is not doing well, because that was the high earning, high margin business, which has not only been facing price erosion, but also limited launches because of the regulatory issues that the company is under. And I think going ahead, the US generic business will continue to face price erosion. We have seen that in the commentary of a lot of pharma companies after the first quarter earning. So for me, I think I still remain quite cautious on this. I will want to wait for this company to deliver on the ambitions that it is stating at this point of time. And I still think that it will not be too late, even if you were to enter post the fact instead of prior to it. Well, the last stock on my radar today is from the fintech space, Paytm. Again, the argument is a lot similar to Zomato, because Paytm being a high growth stock, a tech stock, generally in a period of low bond yields, it will tend to do well because your cost of capital goes down and therefore your valuation premium tends to be higher. I think if you look at that, argument, clearly there is a potential for re-rating as far as Paytm is concerned. Apart from that, the recent turn in focus of the company towards profitable instead of chasing high growth at the cost of burning cash, I think is something that investors have taken to quite meaningfully. The stock has rallied from about 500 odd levels to almost 650, 660 odd levels. At one point of time, it was around 700 odd levels, but it has seen a little bit of moderation. At this point of time, I think the stock still remains quite attractive, Santo, given the high growth potential the company has, plus the revenue share from the high margin segments of the business is actually increasing, and there is a lot of confidence among analysts that in the coming quarters the company will be on the path to achieve that EBITDA profitability it is chasing by the second quarter of 2023.
Well, the argument that I had made for Zomato about linking yields and performance of tech companies, that stands. I don't think that is going to be a game changer here.
I think you're going to be proven wrong on that.
But the bigger point here is that, CJ, just look at how the stock has done between June and September so far. Almost rest of the market, everything has run up, but this is one stock which has pretty much remained steady. It did make an attempt to cross about 600, but has been unable, 800. It went all the way up to 800, but was unable to sustain at those levels, and it is back to what? About 600 odd level. Again, same thing as with Zomato. Now, the market has run out of patience. Theme is fine. All the talk is good. Now start delivering. When we see the numbers, that's when probably we might change our view on the stock. That is the signal I get, at least looking at the prices here.
I think, Santo, clearly earnings is something that, of course, we can't tell how the company's performance will be 8 quarters down the line. Clearly market will have to wait for that to come out. But in the meantime, I think especially with Paytm, the rally that happened couple of months ago before the recent correction was largely driven by the fact that bond yields in US were coming off. Then the Jackson Hole Symposium happened and the entire paradigm shifted on that front, and then you have seen a very meaningful correction in Paytm and Zomato both. So I think that is why my argument comes from the fact that technically there is a possibility that if we do see a crash in global bond yields, as we have seen with the the US 10-year bond. If you look at the US 10-year bond yesterday, it came off almost 20 basis points in just one day. Bond market is not used to those sort of moves globally. So if that continues, I think there's a technically there's a good argument that valuations may re-rate and therefore prices too.
The last stock on my watch list is Nalco. Again, CJ, the stock has taken a beating mainly after we had a profit warning from one of Novelis customers. So the outlook on the aluminum, metals in general has changed quite a bit, but at these prices probably the market seems to be factoring in a worst case scenario, which possibly then explains why the stock has gone below its book value. So it's purely a valuation game at this point in time. I would say that there is very little to lose, if one were to look at this stock from these levels.
Well, Santo, yeah, maybe if you're trying to play a tactical game, betting on a mean reversion, maybe you could see some short-term gains. But I think if you look at it from a 6 to 12 month perspective, clearly at this point of time, the aluminium dynamics doesn't seem very kind. Demand is clearly a big issue with beverage can makers globally cutting down their volumes, maybe automobile makers in Europe and US also cutting down their volume estimates going ahead. Demand for aluminium will become a concern. Even if supply has remained tight, we know that aluminium smelters in Europe, some of the aluminium smelters there have shut down, and there was hope that if demand sustains, then probably you could see a spike in aluminium prices, but that has not come true so far. Apart from that, of course, I would expect that aluminium prices going ahead could weaken even further as we get into that recessionary period, not only in Europe, but in US as well, Santo. So for me, I think tactically, maybe you can play that, mean reversion game as far as the valuation is concerned, but if in the long term, I think you could see a lot of profit booking in the stock.
Well, with that, it's a wrap on this edition of Market with Santo and CJ. Thanks for watching, and please do remember to post your feedback in the comment section below.
And as usual, guys, keep following us on the social media links that you can see at the bottom of your screen. And for the rest of your financial news, stay tuned to moneycontrol.com and download the Money Control app. We'll catch you again live at 3 p.m. with all the day's action. Till then, have a great trading day.